Well, hi everyone, it's James here. Welcome to Natural Gas on this Monday, the 1st of December. I was hoping that we'd finally have a COT report, but we don't. I saw this sort of date on the barchart.com page a couple of days ago, but then scrolling down, I see there's no update since October the 14th. So we still don't know what the positions of traders are. Let's have a look at the weather. We can go across to nat gas weather to see if there's anything. This week, nat gas demand low, as you can see by that little indicator, November 24. I'm not a subscriber here at the moment. I was, but I've sort of discontinued that. But you can read here what this is all about. A bit of a mixed report, really, and the various weather models are not all that clear, so not a lot to be gleaned from there. So let's have a look at natural gas intelligence, another place that you can gather some info on natural gas. Let's read the main stories. Story of the day: as storage draws down and demand mounts, January natural gas futures debut in bullish form. Yeah, so natural gas futures built momentum early on, expected cold fronts, and sustained much of the progress following a government inventory report showing that underground supply continues to decline. We saw that report coming through last week. So yeah, that's the kind of news. A few other headlines here. Storage report fees rally, as we saw. Western hubs lead natural gas forwards decline amid stout supply. Polar vortex enters the chat as natural. They always come up, these polar vortices. That was a few weeks ago now. And so on and so on. So not a lot there, and we now need to look at the chart. So let's go straight across. And here's the natural gas chart. This is the futures chart at FXCM. I normally trade this at Black Bull markets, but they're having some problems with their liquidity provider for the natural gas futures. So I've switched over temporarily, I hope, to FXCM. Let's have a look at what happened. Now, we talked about this. I did cover this in my live stream fairly extensively last night. So I will link that video to the end of this one. I'd encourage you to go and watch that and subscribe to the channel so you don't miss future updates. I will be doing a natural gas update every single Monday at this time, so you can tune in on every Monday if you want to know about natural gas. Now, here's the day chart on the futures. This is the front month futures at FXCM reflecting the Henry Hub price. And you can see we had that big rally up on Friday in very thin markets. We saw a rally up in Bitcoin and stocks, everything moving up, and a few of the other commodities in thin markets. And of course, these moves are not all to be trusted altogether, as thin markets often lead to dramatic reversals or at least a filling in of the volume that was missed out. Now, this is the day chart moving down with a potential tweezer top so far. I'd like to get short here. My overall view, and once again, I must refer you to yesterday's live stream. I've covered this in some detail, but my overall view is that we've moved into a higher range, and that demand for natural gas will continue to propel us into this higher range, keep us above $3. And so anything above $3, I'd like to be buying for a top of $4.50 or $5. We're in that region now. So I think we're pretty close to the top. I explained this level here where the green line is and how important that line is. We haven't quite reached it yet. We could do that. We haven't quite got there yet, but I think we could. We are turning down prematurely. But that green line is an important line because it's not only the market structure break after the sell-off, the big rally, of course, and the sell-off with liquidity provided by COVID and interest rate cuts to zero, basically, and then massive liquidity coming to the market drove everything up, including commodities, but also assets, gold, silver, stocks, crypto, all that sort of thing. But some of the commodities too drove it up. And then, of course, we had the Ukraine-Russia situation driving up even further simultaneously. Then it crashed down again, back to that point where the green line is, and that's the level that we've tried to reach up into. So you can see we didn't quite get there, but we may have got far enough already, and this might be the top. It's very overbought on all the indicators, stochastic, RSI, etc. I'm not going to put those on here for brevity's sake. So there we are. Is this going to be a tweezer top just shy of the resistance level that I was hoping to tag in order to get short? And if we are going to move down, how far down could we go? Now, looking at this day chart, the consolidation point of control is down here at $4.50. That's the obvious target where the 20-period moving average is for the down move. But I think if we break down below $4.23, 25, let's say, I think we've got a very good chance of moving back to $3.50. And at that point, I'll be looking for opportunities to reverse the shorts to get long for a move all the way back up to where we're currently trading. As I said, I think we're trading in a higher trading range between $3 and well, maybe $4.50, something like that, compared to the lower trading range below roughly $3.75 to $3.50, down towards actually as low as $1.50 over the last couple of years. I think, as you can see from this week chart, we've moved out of that lower range and simply shifted, phase shifted up into a higher range with that base down here at about $2.68. I think it's more likely to be $3. So looking for a short here, and then looking to reverse that short and get long at around $3.50 or $3.25 or $3. Natural gas likes the rounds, half rounds, and quarter rounds. So watch for the round numbers, 3, 325, 350, 375. Let's go back to the 4-hour chart quickly just to finish this off. And I hope by the time we do this next time, we'll have more data from the COT report and we'll be able to find out how the market's positioned. We don't know properly just yet. As I said in the live stream yesterday, I suspect, let's go back to the day chart or even the weekly chart, that we've got a lot of very large, oversized, overbought, too heavy positions right at the top here, particularly after that breakout from the consolidation. Bit of a periscope, really. And if that periscope is going to be slammed back down into its periscope slot, is having a good go at that right now, trying to do that. I'd like to get short, like I said. And so how could we do that? Well, we could just get short right here, or we could wait for a move to the green line, to the top of that range, and the market structure break, something like that, then for a short. Don't rule that out. That could easily happen. Make that a little skinnier and make that red. That is possible. Or we might just keep moving down from where we're currently trading and just move down. First of all, of course, down to that level down there at about 450. But once we break down through there, if we can, and through this big order block, we could get down to the 200 period at about $4. And then, as I said, 350, 325. And at the worst, I think $3 before a move right back up to where we're currently trading, closer to $5. So that's what I think on natural gas. And as I said, I'm trading the futures here at FXCM in lieu of trading them at Black Bull markets where I normally trade them. Once we get into the final week of the market before the rollover week, I'll switch back to the continuous over here at Pepperstone and start trading the continuous. So we've been trading the continuous up until now, up into this last week really, until the futures rolled over on Tuesday last week. So that's natural gas, folks, and I think that plan's pretty good. We'll try and sell at the green line, or try and get short at some point for a move down into the order block and maybe a bit lower. And looking at the day chart, I'll show you the RSI just to sort of finish this off, put that indicator on, and you can see how overbought we are on the various time frames. This is the day chart, very overbought. In fact, when we got to the consolidation zone, you can see the RSI is not making new highs. In fact, it's moving down as the market is making new highs, moving up. That's called RSI divergence. And if you put a 1473 stochastic on, you'll see the same thing. So RSI indicating that we're topping. We're trying to top here, but where exactly are we going to turn around? Do we need to get to the green line like I've indicated, or is this high enough? And we're not going to get there. I suspect we might try that actually, and so I'm waiting for that to happen. But if we do start moving down, I'm going to have to try and get short at some stage, but we'll watch out for that. I hope you enjoyed that, folks. Please like and subscribe. I do this video every Monday now, so you can catch me on Mondays for natural gas, and I will see you on Wednesday live with Paul. And don't forget to grab Paul's crypto video on Tuesday. That's tomorrow, which will be up on this channel too. But I will see you live on Wednesday here on this channel. Make sure to subscribe, press the notification bell so that when we do go live, you know about it. You'll get an email or an alert. Take care, have a great trading day, and I'll see you in the next video.